So, let's talk about something huge today. How do you take the money you've worked for, money that might just be sitting there, and turn it into an active source of passive income using crypto? Now, we're not talking about crazy risky trades or some get rich quick fantasy. We're talking about building a real, reliable system that works for you.
It's a scary thought, right? You work hard for your money, you put it away, but is it actually working for you? Or is it slowly, quietly losing its power while you're not even looking? And this right here is the core of the problem, dormant capital. Thanks to inflation, any money that isn't actively growing is, well, shrinking. Its buying power goes down every single day. That's the exact problem we're going to tackle.
It turns out most of us make one of three common mistakes. First, just jumping in without a real plan. Buying some crypto just because you heard about it. That's a recipe for disaster. Second, leaving everything in a bank where it's earning next to nothing. And third, and this is a big one, blindly following signals from other people. That's basically handing over the keys to your financial future.
So what's the fix? Well, it's not a scheme. It's a system. We're about to break down a structured, three-step plan that's all about generating predictable income month after month.
Okay, so here's the game plan. Step one is all about getting your goals and mindset right. Super important. But today, we're jumping right into the action. We're going to focus on step two, structuring your smart portfolio, and step three, flipping the switch to activate that passive income. Now for step two, building that smart portfolio. And here's the thing you've got to remember. There is no one-size-fits-all answer here. The right strategy for you comes down to your personal goals and, most importantly, how much risk you're comfortable with. Because, hey, we're all different, right? So you got to ask yourself, which one are you? Are you the slow and steady builder, or are you okay with a bit more of a roller coaster ride for potentially higher rewards? Figuring that out is your first move. All right, let's kick things off with a conservative profile. The name of the game here is protecting your capital. A full 50% is in stablecoins. Think of these as crypto pegged to the US dollar, so they're stable. Then you've got 30% in the big dogs, Bitcoin and Ethereum, and just 20% in other altcoins. The whole point here, super simple, stable, predictable cash flow. Okay, next up, we've got the moderate profile. And this one is all about finding that perfect balance. It puts 40% in the giants, BTC and ETH, another 40% in promising altcoins, and keeps 20% in stablecoins so you always have some cash ready to go. This strategy is really aiming for that sweet spot right between security and growth. And for those of you who are a little more adventurous, there's the decided profile. This mix is really built to maximize growth. It's still got a strong foundation with Bitcoin, Ethereum, and stablecoins, but it dedicates a big 35% chunk to top altcoins and even carves out a 5% slice for riskier projects that could have explosive potential. Yeah, this one's for someone who's not afraid of a few bumps in the road. All right, so you've got your portfolio all set up. Now for the really cool part, activating it. This is where we make your crypto actually start working for you 24/7 without you having to be glued to a computer screen. And this really gets to the heart of what we're talking about. Most people think crypto is all about frantic trading, buying low, selling high, but that's not the only way. You can actually create a constant, predictable stream of cash flow without doing any of that. Let's dig into how that actually works. So our first strategy is staking. The easiest way to think about it, it's kind of like a high-yield savings account, but for your crypto. You just lock up your coins, which helps keep the network secure and running, and in return, the network pays you rewards. It's really a foundational way to earn passive income. Now, the real magic of staking is this. You get to keep your main asset, let's say Ethereum, and earn more of it over time, all while that original Ethereum can still go up in value. Returns are usually in the 4 to 8% APY range. That's annual percentage yield. It's a really solid strategy. Okay, strategy number 2 brings us to CeFi, which stands for centralized finance. These are basically established, regulated companies that work a lot like banks. You deposit your crypto or your stablecoins with them, and they pay you interest. Simple as that. You've probably heard of platforms like Nexo or Len. That's what we're talking about. The big advantage here, especially with stablecoins, is earning a really steady cash flow paid out in digital dollars, with yields often hitting 5 to 10% a year. I mean, compared to your regular bank account, it's a whole different ballgame. And our third strategy. This one can be a real powerhouse. It's called providing liquidity. Imagine a big community pot of money that people use to swap one currency for another.
Every single time they make a swap, a tiny fee gets collected, and you, as someone who put money in the pot, get a cut of that fee. And folks, this is where the returns can get, well, pretty wild. We're talking monthly returns here, often anywhere from 3 to 15% depending on what's being traded. You get this recurring income from all those little transaction fees, and you can even set it to automatically reinvest and grow on its own.
Okay, theory is great, but let's make this real. We've talked about the different investor profiles, we've gone over the strategies. Now let's put it all together in a practical example. This is where the rubber meets the road.
All right, let's say for this example, we're starting with a $10,000 portfolio. Now, the key is you're not going to put all $10,000 into these active strategies. No way. We're just going to activate a small strategic piece of it to get that passive income flowing. So check this out. We're only activating 25% of that portfolio, just $2,500. And look at how we're splitting it up to diversify our income, not just our assets. We put $1,000 into ETH staking for those steady, solid returns. Another 1,000 goes into stablecoins on a platform like Nexo for that predictable cash flow. And the last $500 goes into a low-risk liquidity pool to scoop up all those trading fees. And that right there is the whole point. By creating this little active zone in your portfolio, you're generating income every single month without having to sell your main investments. They're just working for you in the background. It becomes your own personal money-making machine. So at the end of the day, what are we really doing here? We're taking that money that was just sleeping and turning it into a superhero for your finances. It's out there fighting inflation and building your wealth for you so you can focus on, living your life. So I'll leave you with this one final thought. Forget the numbers and the charts for just a second. If you had an extra stream of income coming in every single month, what would that actually do for you? Would it mean more time with your family? Less stress about bills, the freedom to chase a dream? What could a system like this unlock in your life?